Wall Street Journal with a headline this morning that's got to make you pucker up a little bit. Wall Street Journal article, gold. Yes, gold has not rallied this much or this hard since 1979. Folks, again, there's a lot of similarities and differences between today and 1979. In fact, I would ask you to review my 55-year spreadsheet. Go back and look at 79, 80, 81, and then look at what's going on today. There are many, many similarities and some stark differences, but let's just say the 70s, specifically the late 70s and early 80s, sucked. We had back-to-back recessions. It was not a good time in the Zuber household by any stretch, and certainly do not want to go back and repeat the craziness of 1979, 1980, and 81. That would be no good. Lots of stuff going on in the news, but we should talk about retail sales. Retail sales was the big number of the week. A lot of expectations that the consumers would be pulling back, that the consumers can't spend, and that the economy would head into a recession. Well, consumers do what consumers do, and they said, hold my beer. Last month, sales were up 0.6. That was revised up, not down. Again, revised up to 0.6. It was estimated to be 0.3 this month, so lower. In fact, folks, we got a repeat of last month at 0.6, which is a strong, strong number. If you want to go X autos, it even got stronger. X autos were up 0.7. If you're looking for a year-on-year number, it looks like retail sales are up 5%. Note, please note, put a big asterisk next to that. Retail sales are not adjusted for inflation. They are nominal. So while it is up 5%, I don't know. What do you think inflation is? 3, 3.5, 4? So again, a lot of that 5%, no doubt, is inflation, but there's probably some real growth in that as well. If you go behind the numbers, the two top and two bottom are online sales up 2% and clothes up 1%. On the downside, you had department stores down negative 0.8, and you had furniture down negative 0.3. Furniture makes a lot of sense. It is one of the industries most impacted by tariffs, so it makes sense that that is down, aka demand destruction. Yes, folks, demand destruction is something we've talked a lot about on this channel. Again, consumers can simply decide not to participate, which means demand destruction. We also got a scary number yesterday from Empire State Manufacturing. Last month was 11.9, strong month, a lot of growth. It was expected to come in slightly weaker at 4.5. And folks, it missed deep to the dark side, negative 8.7. Now, there is some talk about this particular region of the country being very influenced by trade with Canada, and that has not been going very well lately. But again, down 8.7. Don't know if you saw this, but CoreWeave, so I was a software sales guy. Hopefully you know that for 20 years. Some sales team, actually, you know what? This is probably what's called a pocket account. So there's probably no sales guy on this, but I was just looking at an order. CoreWeave got an order for $6.3 billion from NVIDIA. The biggest deal I was ever a part of was 9 figures, over 100 million. I could not imagine doing a $1 billion deal. That would be a very large commission check in my world. Crazy. Don't know if you saw the headline yesterday, but President Trump would like to go from 90-day reporting cycles to 6 months, thus having public companies only report once every 6 months, so twice a year, versus their currently quarterly flow. I don't know how I feel about that. No, I know how I feel about that. I don't like it. Again, as somebody who was burned by 2 frauds, Enron and WorldCom, obviously those financial statements certainly didn't help because they were garbage. But I would think it's just easier to have frauds when you have 6 months versus 90 days. So that is my opinion. I do not like that particular idea. Don't know if you guys saw this, but we have record credit card debt. However, we also have record home equity. So my question for you, my legitimate question for you is, when do consumers who are a part of this equity-rich situation, when do they line up at the ATM machine, perform cash-out refis, or seconds, depending on your financial situation, and simply whack the credit card debt to zero? I don't know about you, but that's coming. I certainly believe that's coming. We got some analysts talking about Fed Day. We're going to talk about that later today, hopefully with Anna Kelly. But according to 93 analysts, 85 expect a quarter. 6, I can't believe this. There are 6 analysts that think no cut is an answer. Wow. Okay. And there are only 2 that expect 50. We'll make it 3. We'll throw myself on top of that. We'll be 3 that expect 50. CNBC just did a Fed survey. 82% of the respondents think Trump wants to eliminate Fed independence. I don't know. Based on a tweet I saw this morning, that is not true. Again, I think that's just people reading the headlines. 68% expect higher inflation. 57% expect higher unemployment. And 54% expect lower growth. Folks, welcome to stagflation. No bueno. Not good. We got home builder confidence today, and it is still at or near a record low of 32. It is not picking up yet. If rates were to fall or get some incentives, that could turn around quickly, but still no bueno, not good. Tom Lee talking about Fed Day. According to Tom Lee, if the Fed cuts, you will see 3 winners. You will see the NASDAQ 100, aka the Mag 7. Bitcoin and Ethereum will have a nice push. This is again according to Tom Lee. And finally, small caps and financials would be a place to play. I do want to highlight one thing that I'm a little disappointed in. In the last 7 days, we have had zero people sign up for school. Folks, I am very clear that school is the place for everyday wealth builders. It's the place you go to ask questions, the place you network, the place where you can look at a map and see where other investors are near you. We're keeping it at a price point that is frankly stupid at $20 a month or 67 pennies a day. I'm not sure why nobody signed up in the last week. Maybe I was traveling and didn't talk about it, but I think it's the best place for investors to be. And I just thought I would share that I was disappointed that didn't grow this week. So I don't know. I just wanted to share. Mike Simonson out with some housing data. There are fewer sellers in 2025. Again, this is something we've talked about. Sellers will throw it out there. Take it off, cancel, withdraw. We'll wait for the spring. Withdrawals are spiking. Yes, folks, people are just taking their properties off the market. They will reevaluate in the spring. Inventory seems to be capped at 860K. These are, again, single family homes, what Mike focuses on. Last year, during these a couple of weeks, we were adding 60,000 homes a month or a week. That is not occurring now. Home prices are still up year over year. When you look at median home price, pending home sales are up also 3%. But don't forget, pending home sales might be up, but so are cancellations. Cancellations are up as well. There's a lot of talk about stocks melting up should the Fed initiate a multi-rate cut cycle. Most people calling for September, October, and December, plus 3 more next year. That's what the market says. Dan Niles is talking about a melt up, and he says it's time for prudent, irrational exuberance. Oh no, irrational exuberance. Go look that up. I think that was Greenspan. Might have been Bernanke, but I think it was Greenspan. Irrational exuberance, not good. Canada's taking it on the teeth. Will the U.S. follow? Canada lost 66,000 jobs in August, and the unemployment rate is 7.1%. Yes, folks, last I checked, I think the US is still 4.3. It might be 4.4. I think it's 4.3. Canada, 7.1. But don't forget, in the US, we talk about U3, not U6. U6 is 8.1. Last I checked, U6 includes workers who are not currently looking. They're out of the market. Former CEO of Goldman Sachs says America is due for a crisis. To which I say, are you not paying attention? It seems like we go from crisis to crisis. What are you talking about? But in his wisdom, he does point at something that we've talked about on this channel a lot, and that is the credit market. The credit market is not behaving like normal. The credit market, the spread between A paper and junk is at a record low. Generally speaking, that's not good. In the big scheme of things, that's not good. So we shall see. What else do we want to talk about? Elon Musk dropped $1 billion on buying Tesla stock. Seems like we have a deal reached on TikTok. And Mark Zandi, the job market is so bad today, we might already be in a recession. I think it was Mark Zandi that said there was a 48% chance of a recession. Maybe it was 54. I don't know. Call it 50%. Now he's saying that, you know what? We might be in a recession already. Folks, don't forget to buy your tickets to our Vegas event. I have some giveaways for you if you buy in September. If you buy in September, you will get $100 to spend in my Teachable courses. You will get a very intimate conversation in October where you can ask me some questions. And of course, to help speed up sales, I'm offering autographed books. You can either get autographed 1 rental at a time or autographed 15 conversations with real estate millionaires. And if you buy 2 tickets, which lots of people should come together, bring your spouse, bring your significant other, bring your best friend, we will get you 2 books, 1 of each. So again, link will be in the description below. I hope you have an amazing day. Please join school. If you don't like it, you can leave, but give it a shot. You want to be around everyday wealth builders. You want to have friends like our community. They will help you. They will motivate you. They will be there for you. So I hope to see you inside school. Hope to see you at our Vegas event. Don't forget to get the special autographed books. Take care. And of course, don't forget Steadily. Steadily is landlord insurance. Again, they've saved me lots of money, most recently on a duplex. Actually, 2 single-family homes, kind of a home and an ADU, saved me $1,123 and gave me better coverage. So again, maybe they help you, maybe they don't, but you got to check them out, see if they can. Take care. Bye.